Super interesting here because one of the reasons that your earnings were so strong is that your cost cutting was so deep and then the market rebounded. Is that a sustainable sort of state of affairs, or will you ultimately have to spend more if the recovery remains intact?
Well, controlling the cost is sustainable. Clearly, there'll be some cost that comes back because we took some one-time actions. We stripped more than 30% of the cost out of our business. And the other benefit we had was our margins increased more than we expected, primarily because inventories went down on new and used cars and we couldn't replace them. But yeah, we're going to come out of this downturn a much stronger company, and I think we'll be about 20% more efficient in terms of what we can produce per head, so to speak.
So 20% more efficient permanently. You stripped 30% of the cost out that quickly. Are we talking about layoffs and headcount reduction, or what does that mean? What exactly did you do? How did you pull that off?
It meant furloughs. It meant furloughs. And yes, at one point, our business was down 50% in the U.S. in early March. And we furloughed about 50% of our people. In the UK, we were totally shut down for 2 months in terms of sales and 6 weeks for service. We furloughed 90% of our people because we were closed. And but now we're back to about 70% of our original headcount. So we're bringing the people back every week. But we've rebuilt the business from scratch, and it's going to be much more efficient.
So how can you be 20% more efficient permanently? Does that mean 20% less labor intensive?
Yes, I would say that's a simplified way of saying it. But yeah, we've gotten lazy and sloppy. We're now selling a lot more cars through Acceleride over the internet, about 1,000 cars a month, about triple what we did last year. That's much less labor intensive for us. So yeah, we've made a lot of process changes, and we can do more with less. And we need to, because volumes are still not back in terms of new and used car volumes in the U.S. So yeah, we have to be much smarter.
3,000 cars sold on Acceleride in the quarter, Earl, and I'm wondering what percentage of sales is that? It sounds like a big number, but I'm wondering in the total scheme of things, is this a meaningful amount?
10% or so, you know, 10% or maybe even a bit less, but it's growing. It's triple what it was last year, and it's growing very fast.
Is this a direct response to the likes of a Carvana, which has really taken sort of the auto dealership model by storm?
Well, actually, we've been doing this for a long time. So it's nothing new for us. I would say it's a shift in what customers want, particularly with the virus. Many people are happier to shop at home. We're delivering anywhere between 10 and 20% of our sales through Acceleride to their home. So I think it's more a customer shift, and it's more a competitive requirement these days. We have to do business the way the customer wants to do business.
Earl, on that note, if you start doing more of your business over the internet, does that mean you're going to be competing with big national online platforms like Carvana more in the future? And if so, what's your advantage? What's your differentiator for that local buyer?
Well, we've been competing with those people for a long time, and they're more of a finance play, I would say, than anything else. You know, we're a full-service organization. We provide new vehicles, used vehicles, financing, parts, and service. And we also have access to cars from the OEMs and certified pre-owned vehicles. So, yeah, we have a lot of competitive advantages by being franchise dealers.